Okay, here we go. Happy Sunday to all. Welcome to Sunday session. We will have, I think, more groups that have actually confirmed that they will actually join us as of Sunday next week. So we have got groups in Nigeria, in South Africa, also in Scotland. Most probably, it's just a battle of timing at the moment because we do have loads of Asian traders based in Scotland in the oil and gas industry as well. So they're trying to, it's just that they're, too early for us as well. Okay, welcome. And today is the 18th of July. It's the Sunday Commodities session by Bretton Academy. And we are usually in this session on Sunday. It happens at 9 a.m. Cyprus time, GMT +3. And this is where we would be discussing about commodities and the energy market in general. So the main focus would actually be crude oil, whether it's the WTI of the US or the Brent oil of the UK. So this is where we will be talking about trend for those who are interested in trading and knowing trade ideas as well as trade signals on crude oil, on gold, commodities, precious metals as well. That could actually include mainly gold, of course, but then silver as well as palladium and platinum and various other, depending on what has actually been moving the market. The last a couple of weeks ago, if I'm not mistaken, we have talked about copper as well, and that was also a good run on the trend as well that got actually very strong, and that has pulled in the other commodities market, especially the precious metal market. So the good thing about the commodities market, energy market in general, is that one would actually trigger the other. So it will work like a ripple effect. So that would actually be giving us opportunity as a whole in the whole of the commodities market when something is actually moving. So when something is actually moving or expected to move and have got a risk event going on, like let's say we'll be talking a little bit more about a meeting that is going on today. Today is Sunday. It's a working day in both the United Arab Emirates as well as in Saudi Arabia. So quite a number of traders, they get confused between the differences of the United Arab Emirates, which is UAE, and also Saudi Arabia. Saudi Arabia is a country independent in its own monarchy, on its own, but the United Arab Emirates has got 7 monarchies, including Dubai and all that, and Abu Dhabi is the capital of United Arab Emirates, Abu Dhabi. So then Riyadh is the capital of Saudi Arabia. So we are talking about 7 monarchies in the United Arab Emirates. So there's been a dispute amongst them. So they have decided of a virtual meeting today. So it's taking place as we speak in virtually, basically via the internet. But then all the big boys are talking about reducing demand, output level, and everything else. Not reducing demand, sorry, reducing output and managing the demand that is really skyrocketing at the moment. Okay, so but we want to take a look at the technicality side of it. We want to also combine with what we know and what we can be in control with in terms of the technical side of it, so we can match technical analysis and fundamental analysis together. So this is basically where we will be discussing all these that are relevant to the market and to the traders that are interested in trading CFDs on oil, gold. So whatever that you are trading on the MT4, MT5 platform, it's the CFD that we are talking about. So we're not owning anything. We don't own the physical barrels of oil, or physical bullions or pieces of gold and things like that. Here we are only speculating on the price, and CFDs are basically meant to do that. So when you look at stocks, indices, Amazon, Apple, anything that you look at on the MT4 platform, you're literally trading CFDs, contract of differences. Okay, so you don't own physically any shares or anything like that, but you're speculating the price of the movement, which basically gives you the wonders of trading CFDs with being able to trade both ways, up and down, meaning you can buy and you can actually sell, you can ride on both trends, and you're not limited to only appreciating prices like the real stocks that you trade. So this is where the opportunity of trading and profiting from it basically multiplies when you trade CFDs. Okay, all right. It's a volatile market, of course. It's got risk involved in there, but then there are ways to actually manage your trade. So this is where we want to discuss a little bit about gold and crude oil. As I've mentioned, we have got a meeting today with regards to the oil prices to reduce output, and there's a dispute between UAE and Saudi Arabia. So that's the reason why I have pointed out the differences between Saudi Arabia as a country, a monarch of its own, and also UAE made up of 7 monarchies, or Emirat as they call it, or Emirates. Okay, so Abu Dhabi is the capital of UAE, and they are actually having a dispute amongst themselves, and hopefully they come up with a resolution. But most importantly, we want to be aware of this fact that they are discussing today. So there may be some volatile movements or decisions that may stir up to a trend or anything like that tomorrow when market opens. So this is where I want to keep you guys aware as well, and be aware of it so that you don't get totally shocked by the movements, or totally getting overly excited with the movements, because things can actually change. And as you guys know already, that oil is very, very not only volatile, sensitive to geopolitics and various other things, and especially if they have actually talked about some things today. And also, if the dispute gets even more heated up, that might actually make the market for oil, crude oil in general, it would actually impact UK oil as well, and various other commodities in the market, and USD as well. At the moment, USD is doing quite well, strengthened since Thursday. So that's the reason for it to actually pull gold down. So we want to take a look at the charts, look at gold, look at oil, crude oil, WTI, and Brent, as well as any other precious metal or others that are categorized in the commodities market, to actually take a look for opportunities to actually trade. So right now there is a catalyst. The meeting today, virtual meeting today, would actually move or make oil move in general, especially the WTI, and that could actually be quite an impact in the market. So with that, let's just also take a look at what they will be discussing today is the new output policy, okay, between especially because of the dispute between UAE and Saudi Arabia. That's what they're going to come up with a resolution on agreeing on the numbers, the policies, and all that, because they have actually discussed in the past to cut output by 10 million barrels per day. Okay, now it is standing at 5+ million cut. So they want to actually double that cut, and that is where the dispute has actually landed them on at the moment. And this is where we want to actually look at tomorrow. What would actually the resolution be? I mean, whether it's a resolution or it's more the sentiment after the meeting that matters most, because whether the sentiment is actually cold, very heated up, and things like that, that is what is going to be stirred by the mainstream media to make it a trend. This is how it actually usually works. So it's like Chinese whispers in a way. What is actually being said can actually be added onto more spice to make the market more either excited to the upside or excited to the downside. So that is the two directions only that it could go. But then for gold in general, it looks like it could potentially be going sideways much more because it is in unpredictable mode. As you can see, we have discussed prices of where it could actually land and things like that. And we have talked about these three blue lines right here, I think as of Wednesday's session on Bretton, if I'm not mistaken, or Mondays, where we have seen prices floating here, but then expect it to come down and find a little bit of support at this area right here. So it has already done that. Whether or not it will pierce through much more to go down or not, we're not sure. That does actually depend on the USD strength. But in my guess, I mean, looking at 4-hour chart itself, if you're looking at gold at this moment of time, we see that you have got bearish power going on to the left. And if we go on to the daily chart, we can see that we have got more and more bearishness or bearish previous selling power that have actually been waiting for us right here. Now, the price as of Friday for gold has actually closed exactly at the opening price of the previous mother candle. And this previous mother candle was for, I think it is this year itself, 17. No, sorry, that's the wrong one. I think something is not right here. Give me a second. This is on the daily chart. Yes, okay. So it has begun that fall there in June, last week onwards. So here, as we can actually see, if we are looking at, earlier we looked at the 4-hour chart. I've looked at the 1-hour chart as well. But as I go on from 1-hour chart to 4-hour chart and then daily and then weekly, that candle, bearish candle buying power just gets longer and longer. So that is actually a sign to give me reasons to believe that we are probably going to enter more of a selling zone, and that selling zone awaits us here in red, and that selling zone has actually been marked way back as well. So if at all price were to enter with the USD strength and everything else as well, starting tomorrow, let's take a look at how the oil as well prices go, because that does actually pull in the USD factor as well. So if the USD remains strong as well, there's a lot more reason to expect gold to actually fall, but most importantly to actually fall and enter the selling zone. So that selling zone would actually be at the 1800. A lot of technical traders, especially technical experts, analysts and all that, they're looking at the 1860. They have actually been communicating about the 1860 target for the buy, and that didn't really happen because that happened 2 weeks, 3 weeks ago onwards. It has actually been happening. A lot of news, especially in FX Street and all that, which I don't really follow FX Street's news as well, because it's all too jumbled up and it's got too many sources from brokers and too many sources from analysts who are working for brokers as well, and that sometimes it looks more like a competition amongst them to actually write really well, as opposed to help traders understand what they need to buy, sell, and when. This is and what exactly the trend is for the short term, medium, and long term. So they don't actually do that. So I'm not really very interested in the news that are published usually by brokers and the analysts as well in FX Street. I would prefer maybe Daily FX, even though it is actually connected to IG Market, but then the group of analysts are quite independent as well, and they have got a better understanding of the market, together with being not very biased into giving out whether to sell or buy or opposite and stuff like that. But in FX Street, sometimes you get a lot of conflicting type trade ideas and trade signals, and I don't see that to be very useful for traders like myself as well. So I would like reliable news as well. I wouldn't be, encouraging you to read and overread all these fundamental news as well, but then it's important to know on a case-to-case basis on what is moving the market the most. Like for now, it's the OPEC plus, and we can then, see some headlines and then get a little bit of confirmation and then go onto your chart to do a little bit of technical analysis to match with what's going on in the market on the fundamental side or on the sentiment side. So here, for example, let's talk a little bit about gold first before we go into crude oil. So here, as we can see, market closed at the 1813, if I'm not mistaken. Let's just check. The 1811, 1812 area, which is exactly the opening price, as I've mentioned, of this bearish candle right here. So what we need to know and need to watch out for is whether or not the price of gold, together with the strength of the dollar, is pulling down the price as of tomorrow market open. So once we have actually seen that coming down a little bit lower, then I would think that as it comes down lower, traveling alongside this previous mother candle right here, and then that would actually give us a little bit more ease in understanding the direction that gold wants to go, or where gold's market decides. So once it is actually gone down a little bit more, I would suggest, I mean, even like for myself, to just get that confirmation and not sort of rush to enter the market as soon as you look at it falling, because the main reason is so that we don't actually get into a trap planned by the market. Okay, because if it does actually come down here, might actually find a support and then go back up and then play a sideway, and then we'll get trapped into our trend, and then into the trend at that moment of time. So that could actually be quite risky move to actually just jump into the trade straight away, following whatever the candles are actually doing at the time. So at this moment of time, I would suggest to not do that amongst traders, mainly because we are expecting a very big volatility as well, driven by geopolitics. We don't know the extent of the conflict between Riyadh and Abu Dhabi. We don't know that yet. We don't know the resolution yet. So it might actually drag on and also be for the whole week, which is good and bad. Good is that we have volatility and we may have trading opportunity. The bad side of it is that we might get easily trapped into volatile sideway movements, which could actually be very risky for us. So usually at this moment of time, it's probably best for us to look at gold falling first and look at how it reacts to the 1806 area. Okay, so once it actually goes and touch the 1806 area, we want to look at how it reacts. Does it actually react with a stronger bearish mother candle with the body of it entering and piercing through under the 1806 to go into this selling zone? If it does that, then we are very likely going to be in a selling zone. And when we are already in the selling zone, then we have got a huge area to actually expect that drop to actually fall to 1780s area. And that is where I would like to trade, is when the price have actually entered the selling zone for the sell side of it for gold. Okay, so at this moment of time, I would prefer to actually wait and see, just so that we don't get trapped. But of course, for shorter term trader, they would like to ride the trend no matter what happens. Yes, that's their risk to actually take that on, which is no wrong, no right. It's just to be aware of certain levels, especially in shorter term, for shorter term traders, especially just to know which level are you at, where are you at in terms of price, in terms of location of price. Are you exactly sitting at an area where it could actually bounce up or down, and you need to look to the left as well. So if we were to look at the 1 hour chart, and with the 1 hour chart itself, you can actually see that a lot of support, strong support, has actually taken place lower, even for the short term. Okay, we've got some support here, got some support, but not really that strong. We've got the support exactly on the 1806 as well. So for those who, let's say, they want to sell and they want to sell as of tomorrow, and they see that there's a bearish candle, yes, you can actually sell, but be sure that you sell and exit at the 18 before it touches the 1806 area, just in case, because there may be a support area right here as well. There were support areas as well, and it might encourage the sellers to exit and then buyers to come in at this area. So whatever you do, you can sell, yes, but then as you sell tomorrow, for example, it is a better and more likely scenario to actually expect more selling of the gold, because they might want to buy it cheaper later on. But then here, for example, you might see it going up tomorrow for some reason, maybe spike up. Just don't get too excited with the spike up side of it. Mainly might want to find resistance as well, because you need to be very, very careful, whereby even on the 1 hour chart, you might see this whole area here as the head, and then you've got shoulder here. Maybe it is forming a right shoulder. We don't know that yet. If it does, then it's definitely going to come down and then go up to that level there and find correction. But usually traders might get trapped and thinking that it might go up much more, and then they get excited and overexcited with their buy orders, and they start pumping in more buy order as it goes up here. But then it is meant to find some resistance at this area to create a shoulder. So we don't know. It's just us to be aware of what could actually happen, and that is from a patterns perspective as well. So here, this whole area could actually be the head of a head and shoulder pattern, but that is us talking about the 1 hour chart for gold. Okay, so this is basically it. And here, when we let's say if we does see the market go up, you've been pointed out with the resistance level already, and whatever you do, if it does actually go up tomorrow, make sure you do actually exit at the 1817 or just before 1817 area, because that's a very strong resistance area as well, that is triggered by this point right here and this peak right here. And this is where you need to exit no matter what, just to be safe, so that you can actually preserve your capital in terms of wanting to ride the trend for gold. Okay. The red zone, as it is clearly indicated here, the selling zone starts at 1806. And the whole selling zone is from 1806, sell, 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 until 1783. So one more time, 1806 and under, you can sell. 1806 and under, you can sell. Because as we've mentioned this as well, you can sell anytime when it goes into the selling zone, or you can buy at any time as it goes into the buy zone. But it is to your risk to also look at the time that you are entering. Let's say it's already entered in the selling zone, and then when you look at your chart, and that time it is a buy candle, so obviously you don't enter at the time, because you need to enter in the selling zone when it is on a sell type candle as well, right? So that it can give you a confirmation, because if you enter on a sell in the selling zone when it is a buy, it is going up, it's just probably just correcting. So you wait until it comes down again in the selling zone, and then you start selling. So the sell price, the border is 1806, so it could actually enter. So let's say tomorrow, as a scenario, you see it already entering, and it's entering with a bearish candle, a long bearish candle with a bearish body, and it's entering and it's looking quite confident going down, then yes, you can enter. But what if you see it already entered the selling zone right here, but at the time that you're looking at it, it's bouncing upwards and it's a bullish candle, so you don't actually do anything at the time. Okay, is that clear? Right. So then, because as you sell as well, let's say if you've got a bearish mother candle, the body is really looking good, and then you're selling, you see it, and then you enter the sell because it's already in the selling zone. You need to also be really careful in understanding when do you want to exit. So for me, if I look at this bearish candle right here, this is quite a nice bearish candle here to actually start entering the market of the opening price of the mother candle right there. That's somewhere about 1804. So maybe, as the market moves, let's look at whether or not it reached that 1804. If it does reach that 1804, then I could sell almost immediately. But of course, you want to look at whether or not it is still a bearish candle at the time that you're looking at it, because each of us traders would actually be looking at it in a different time frame, and our strategy is different, our style of trading is different. So it needs to also match with what you are looking at the time that you're looking at it. Okay. All right. So once it goes downwards, let's say me, I would like the trigger price to be at 1804, let's say roughly. And even if it does actually start falling, I would still look at this area here as a potential area to exit for the time being, and then re-enter later on as it goes lower. So that is the 1800 area. So you have whatever you do, you've got a support area right there. But this is actually for the short-term trader. I mean, for medium term, or let's say if I want to leave it even for the whole day and all that, I'm not really bothered with all the corrections that's happening inside. That is why I'm not a super short term trader, mainly because of all this correction would actually be bothering me and stressing me out if I were to consider every one area right here to actually be my support. So if I'm selling, I have to go and look at all this area of support and then plan and then get really worried about it. And I don't do that, mainly because it's no point doing that because you have checked the trend on high time frame with the most data as well, and that data is sufficient enough to actually tell you where that whole selling zone is all about. So for me specifically, I would be trading based on the 4-hour chart or the daily chart, meaning I'm not really bothered with the correction in here. So as the price triggers my sell, I will just leave it, and for it, because it's already in the selling zone, so I'm not really trading in and out inside the selling zone or inside the buying zone. I just leave it one trade, one direction, and I leave it to actually ride the volatility and the correction and the floating and everything, and I just leave it as it is because we've made the analysis and we know where the location is for a high probability sell or buy. So if this is a sell zone, one time sell entry, enter and go in. But you can do the same thing as well, one time sell entry short term and then re-enter again, but that is following your shorter time frame 1-hour chart or something. But I am doing it based on the daily chart for my personal trading, mainly based on that rate zone. So it's the same rate zone, but we may all have different style of exiting. That is why exiting is more important than your entry. Okay, so for me, I don't exit. It goes into the selling buying zone, I don't exit until close to the end area right here, because I want to take that whole area to sell and profit from that, because it's already in a selling zone, if it is already in a selling zone. And if the candles inside as well at the time I'm looking at it is actually quite good to the downside, very clear to the downside, very bearish as well, strong bearish candle. And then I add that up with what's going on in the fundamental side of it outside of the chart. And that tends to fuel, if that news and all that can fuel the selling of the gold, then I will just leave it and just have one aim, one exit price. I don't actually go in and out inside a selling zone or inside the buy zone. So that is usually a very different trading style, especially scalpers, short term. They tend to trade inside the selling zone and inside the buying zone, which usually confuses themselves, because they are looking at a selling zone or a buying zone on a long term, which already has very solid data, but then they get stressed out. They stress themselves out into trading short term inside this box. So if you are a scalper, a skillful scalper, which I cannot do, I'm not a scalper at all. I don't know how to scalp. Then you can actually ride with your indicators or your expert advisors, and then you ride along that trend. But that trend, as it enters into the sell zone, is a selling trend. For us trend traders, it's just selling. We don't think about buying, we don't think about correction, we don't think about anything else, we just sell. So we sell and we aim at where take profit is, and we just leave it, you see. So for short-term traders, scalpers, they are a little bit safer, but short-term traders, including let's say intraday traders and all that, they can get quite confused trading inside this zone, because if they are using an EA or they're using some indicators to trade inside this zone on an intraday or short term, a couple of hours or something like that, they can actually get quite confused, mainly because the data that has been supplied is actually supplied from a high time frame, which is quite solid. And what is happening is that when you are trading anti the trend, especially, or you want to trade the buy as well, you want to trade the buy and the sell inside this zone, you are actually trading news. Okay, in other words, you're trading news. What that means is that if you're looking at the 30-minute chart, 15-minute chart, 1-hour chart, and you're looking at the price inside the selling zone, we are all settled with our trades where we don't touch our trade. We just put it in the sell and we just leave it, whether it's negative or positive, we just leave it until it hits or it doesn't hit the take profit. But then the short-term traders will be actually trading based on what is moving the candle, and that is usually news. So the news and the events are moving the candles and not the long-term vision. Okay, so that is the difference between trend trading and not trend trading. Okay, so just to keep it clear so that most of the traders will actually understand that. So here, this is where I would also look at how far I could actually be selling and not get too excited about my selling as well. You see, because let's say this is on a daily chart, and let's say I personally want to put a pending order sell, or maybe not in time for a pending order sell because the market opens tomorrow and my selling intention is at 1804. 1804, maybe it might not be in time, but maybe it is. So what I will do is I will watch the market tomorrow, and then I will enter the market with a pending sell at 1804. But as the market falls, let's say if it does, and then the USD getting stronger and stronger, pulling down gold, going down, I will be making profit, yes, but then I want to also control my overexcitement and not think that it can just go down. No, never think like that, because if I look to the left, as it comes down and down, let's say as an example, it comes down with a really strong bearish candle, and then everything looks great for the sell, and let's say your personal EAs, your personal style strategy as well is showing that the sell is really good, but that is a time that we don't get overly excited and think that it will definitely for sure hit our TP, which is right down here. So my TP is also right down here, very close to 1782 or 1783. But then if I look a little bit to the left, I can see that there is a support opening price of a significant bullish mother candle here. So what that means is that I will mark this area right here as a potential support, and that is at 1786 onward. So what I would do is that I would leave my pending order as it is, but adjust my take profit and exit just to be on the safe side at 1786 and not 1783, just because I see this to my far left. The sooner, the latest left that I can actually see is that mother candle opening price right there. So that should actually be my support area at 1786. Okay, that makes sense. Yeah. So for me personally, my sort of idea is to ride along a sell trend for gold, considering that the USD could actually be stronger and stronger. We don't know that yet, whether or not there are some other fundamentals that might come in from tomorrow onwards, but on as a generic bias, it is more towards the upside for the US dollar and downside potentially for gold. So hence the reason I want to wait. I want to wait until it comes down lower to pierce through the 1806 area. And then at the same time, I need to be sure that the USD remains strong. And also, there's a lot of reason to believe that gold will actually come down much more on the fundamental and new side. If that does happen at the same time and matching it with the technical and my 1804 selling triggers, I will leave that trade and I don't think of anything anymore, and I'll just leave it there, and then I'll take profit. I'll adjust my take profit not at 1783 but at 1786 instead, or maybe even 1783, 1787. So that is basically it. So that is my game plan for the week for gold. And for short-term traders as well, you can always contact me and ask me more questions of how to go forward as you are trading already. Because here we have got a couple of, we've got an ending of a sort of bearishness right here. I would expect this area 1808 or 1809 to be a strong support area as well for the short term, because I'm looking at 4-hour chart. So it is actually quite, it is, for me, it is between 1 hour and 4 hour if I'm looking at the 4-hour chart. If it is the daily, then it's 4 hours and above type chart to about a day for the daily chart if I'm looking at it. So now I'm looking at the 4-hour chart. So it is anywhere between 1 hour. So it's sort of short term, 1 hour to 4 hours. What could actually happen once the market has actually opened. So once a market has actually opened, there is a chance to look at this area 1808 as a bit of a support. So that support right there might motivate traders and tell them that, hey, it may be an uptrend, and then they get very excited and they pump in and they go and buy. Then when they buy, more traders go in and they buy as well, and that would actually then make the bigger boys excited to just wait until they can actually trick you into more buying. And the more you buy, the sooner they will actually cut your excitement and then reverse the market, and then boom, it comes down. But overall, as I've mentioned, we are dominated by selling pressure, selling location. All this area, this whole zone here is dominated by all this area of very bearish candle. As we go on to the weekly chart, you can see that the governance of this whole area right here is actually by this very long bearish candle. So very long bearish body of a candle is getting longer and stronger and more solid as you go on to higher time frame. So that is telling you that whatever you see in the short term is not what it is, mainly because it's not dominated by whatever you see. So even if you see tomorrow on a 1 hour chart, 30-minute chart, price going up, and then all the short term is giving you that nice boost, it could potentially be a trick, mainly because the the higher time frame is actually going the other side. It is actually hinting more bearishness, bearish location, and bearish possibility or selling opportunity, not really buying opportunity. Okay, I mean, this is my personal opinion from what I can actually see. So this is where, if we at all want to look at why is the possibility of it to actually go up for gold is there, but not now. It's for the long term. But then it is still a possibility for majority of investors and traders to actually buy cheap. So that is why they are riding along the trend or pulling down the trend, the gold prices much lower. But the way I look at it is that they can actually decide to pull the prices lower, as low as this area 1707 area, if not much lower at the support level of 1675. So that is probably sort of the max that it can actually be pulled down a lot more. So that is where I would expect it to have the support anyway between 1674, 1675 area, right to the 1708 area. Okay, so that is a potential support area right there for the, whether it's a longer term or so, but that is where it's capped at, because we don't have any more reference point when it comes to gold on the upside or anything like that. This is the cup and handle pattern as well. So this could potentially be, we've discussed this as well, that it usually falls to form the handle of the cup at 50%. So 50% is exactly at the area of, where this blue line that I have drawn as well is. So if it does actually fall at some point, maybe a major crisis or something, it will still find support at that area. So for it to fall all the way down, it's not really that possible. But hence the reason everybody is still thinking gold can actually go up. I mean, in my belief as well, yes, for the very long term, but it is doing all these movements at this moment to actually go down. Because here, as a potential only cup and handle pattern, we see a lot of reason to believe that if at all it goes down, when we talk about the long term, we can speak like the bank's long term, which is 6 months, 1 year even. And you can see that there's an ABCD pattern right here that coincides exactly that fall to that area at 1515 max. Okay, but this is the long-term type correction. This is when we may have some sort of a big crisis, and then safe havens are all going up. Crisis where the safe havens not really paid attention to, and it's more risk, risk on type environment, then we can see that fall all the way down here. So I just want to mark that so that we can really monitor this every Sunday as well when we're actually doing this session. Okay. There you go. Okay, any questions on gold so far? Is it clear on what we need to do? Not to only enter the market, because that would actually really cause a lot of stress for you in the long term, but to monitor. The most important is to monitor prices of what it does tomorrow, as opposed to just thinking of where to enter, because you might not need to enter as yet, depending on how the prices are actually moving tomorrow. Okay, very good. All right, so I think we've cleared out on gold, so we can continue just a little bit more to look at US oil, WTI, and also UK oil. So we've mentioned about all these virtual meeting taking place, OPEC plus. So then we just have to also monitor. Now, price at this moment of time, just to keep you guys aware of it, is that as of Friday as well, price have actually gone under the buy zone, which basically means there may be a potential of a drop of oil prices, especially WTI. Okay, now I'm looking at the monthly chart. Now, as you can see, if it does actually move lower, there is a threat or there is a hint of a double top right here, which basically would give you more hints of a downfall as opposed to an uptrend. Okay, it has gone past and gone under the buy zone. It has also contributed to this bearish candle right here. And what I can actually see is that the potential for a fall would actually be most likely. So there'll be potential of more fall and maybe a little bit of a support coming through, which is here. So it could actually fall, but the thing is that the wick has already touched that support area, which I've marked from this bullish candle right here. So what I would then think is that we need to monitor the market and see whether or not tomorrow it would actually fall lower than 69 or 70. The $70 per barrel area is a very significant price. So it needs to fall under 70. And as it falls under 70, I think there is another area of support to look out for, which is the 68 area. So I would think for us to actually ride along the trend for a sell, it's probably better to wait until it goes down lower to the 68 area and start selling under 68. So you can actually start selling at 67, for example, and then we can look at 67 falling to 65. Not really very nice, but I think once it actually fall from 67 onwards goes lower, and I think the best possible area to look at it falling a lot more is under 65. Okay, so there is some space for some selling from tomorrow onwards, most probably, I think, but we need to look at how it is actually trading tomorrow onwards, whether or not tomorrow onwards it's motivated by bearish mother candle. The body of the mother candle as well is going down and going down steadily, and if it does, then it will be really nice for it to actually see much more action in selling. Okay, so if at all you're actually selling tomorrow and you see that happening, selling, make sure you exit at the maximum at the 66 area. Okay, at the 66 area to actually exit, just to be safe, on the safe side. All right, so that is your exit point, or your take profit point is at $66 per barrel. So you can start selling as soon as tomorrow you see it trading under 71, under this blue zone, and then it's actually falling much more. Then you can actually sell and then take profit, exit at 66. And then we'll look at the market after that, and not to plan too harshly, because we want to be careful with what's going on OPEC plus meeting as well, and also maybe stretched out as well for more selling. Okay, so that's basically it on US oil. Now we'll take a look a little bit on the UK oil. Now for UK oil, I just want to check the price that this week right here. I think it's at 77.55. 77.55. So I believe that wick right there has also hit TP2 on the um, at 77.40, right? So it has hit the TP2 as well. So TP1 and TP2, if I'm not mistaken, has actually been hit. And we are not looking at the possibility of TP3 at this moment of time. So I think we need to ignore TP3 at the moment because the trend is most likely to be to the downside. So at least for those who have actually had a bit of a buy at the time that the price was inside the buy zone, now the price is not in the buy zone anymore. Okay, so we are looking at a whole different so I can delete this one here. We'll be looking at a whole different selling price. Now we have got a gap here as well. That's a big gap right there. This is only seen on the monthly chart clearly. Okay, so we need to close that gap basically. So it went up around there. It has already closed that gap upwards. Okay, so I see the potential of this candle right here, or even this candle right here, to promote a selling type zone. So I'm just going to look at this area. Okay. And the selling price there, 71.74. So we do apply the use of psychological levels right here. So now UK oil, a bit of a change of direction. So we are going to be riding the downward type movement. So as I can see here, it is at 71.74, very close to 71.80. So what we can do is to trade enter the sell trade at 71.70. So 71.70 can actually be your pending sell order price. And you can then look into areas like this right here as your short-term exit as well. Let's see. Exit, or because it might have a correction right there. So 66.60. So you can actually sell at 71.70 and then you'll take profit at 66.60. Okay, especially because the price would have already entered the sell zone. So I'll be interested in selling as well once it has actually gone and triggered 71.70. But of course, we want to monitor what's going on tomorrow as well. But very likely, if it enters there, then the news would actually follow as well to be more and more negative for the oil. And that would actually trigger more selling of the oil as well. Okay. All right. Any questions so far? This is for UK oil. All good so far? Okay, perfect. All right, I think that's all I have for you guys right now. And we can end this session if there's no questions anymore. And then we will follow up all the trade ideas and trade signals as well in tomorrow's Monday session. And that will start the same time as well at 9 a.m. Cyprus time. So this would actually then be giving me the chance to share with you all the trade signals for tomorrow for the whole week as well. All right, that's basically it. Okay, guys, thank you very much for your time. Enjoy the rest of your Sunday and have a great week ahead. And we'll see you guys again tomorrow in tomorrow's session on Monday. Okay, take care, guys. Bye-bye.